Then if you're not talking about work from home, it will be really things like maybe as part of your job, you actually need to go to your client's workplace. So you take public transport or that. All these are also eligible employment expenses that you can claim.
Grab can claim.
Yes, if it's for official.
Okay, welcome back to Chills with TFC. I'm your host Reggie, aka your Chief Financial Coconut, and today I have a co-host on set.
All right,
yeah. So yeah, you were saying what was your role?
You're finding a use for me. I'm a team member. You ask, I come. That's all.
Yeah. Anthony is back in studio with me. Yes, and there's a reason why I asked him. Okay, because guy is very sensitive to tax, because it's an important thing for him. You want to establish why is it sensitive?
I mean, tax is good, right? Every time I feel like, yes, it's nation building. I should pay my dues. Then I look at my bill and then I go, maybe I should pay a bit less dues. Maybe I understand the theory. The practice always a bit hard pain lah.
And today we have a guest on set. Would you like to introduce yourself? What do you do and all that jazz?
Hi everyone, I'm actually Sau Hing from IRAS. Currently I'm actually managing the teams that will handle enquiries from members of the public on their personal income tax.
So if you got any inquiries, you can put in the comment section, right? And
I was like, this is great. I don't even need to email it. I just ask her.
Yeah, we are back here. Next time we should go live with this, right? Live. People can ask straight away and all that jazz. But yeah, IRAS. So what does IRAS really do, right? Because to be fair, right, every time I see the letter come in, right, then I see the IRAS logo, it's very sian one. I'm never excited by it. It's like, oh, okay, time to pay 钱 already, right? So that what does IRAS really?
Tagging on that, I would say it's a heavy problem if you were to get our notice of assessment that you need to pay. Meaning to a certain extent, you do have a certain level of income, and thank you for nation building as well. But in a nutshell, is actually we are the tax administration where we will help taxpayers in terms like making their tax obligations. So we'll do assessment, and as well as if they have clarifications, we'll also be there to assist them.
Okay. So what are the biggest clarifications that people usually have when they come to you? What are their problems?
I would say during this season is actually the filing season. So a lot of individuals may come forward and ask whether, hey, do I need to file my returns? And when filing of returns, like what Anthony has mentioned, right? Hey, what are the ways that I can reduce my taxes legally? So we'll be talking about, we're talking about some tax reliefs as well as some deductions that could be eligible for individuals. Yes.
Okay. And in this season, are there some common problems that you always see out there? People always come to you with all sorts of weird things that they need. The inquiry team should be quite busy now, right? Should be this period?
Yes, I would say this is really the period. But I would say it's also a good sign because it means that individuals are taking responsibility of their tax filing obligations. I would say some of the common clarifications will be, hey, I have received a notification, but my company actually transmitted my income to IRAS already. Do you still need me to file? This is one common inquiry. And since on set, right? So I would like to clarify on that. Actually, it depends on the filing notification, the SMS or the letters that were issued to you, the content itself. So largely, there are actually two categories. One is really asking you to go and e-file your returns. So these are situations where the individuals will need to log into my tax portal and they will just need to declare their income. But in the event, let's say your company is what I call auto-inclusion scheme, where they already transmitted your employment details, what you need to do is just verify the information. And the other part will be, I guess, like what Anthony would be more concerned is, I must go through the list of reliefs. Currently, we actually have 18 types of reliefs.
I got more tabs to open this year.
Yes.
Previously it was 15.
No, I think it was about 15.
About 15.
My Chrome will always slow down.
I guess it's also depending on a few issues, or rather a few criteria like your marital status, gender as well, because there are some reliefs that is only for working mothers. So I'm sorry, Anthony, you will not be eligible. And
okay.
There will also
will be, so it's fine.
Yeah, then of course
there's a transfer thing, right? With the wife and that one we can go into.
Yeah, we can go into the details. So I would say it's one of the clarifications now is really talking about asking them to log into the portal, verify their income, make claims of reliefs. And if everything is fine, then they will just submit by 18 April. The other group, taking the chance to also mention is on the no filing service scheme group. In principle means that all their information is all pre-filled.
Yeah.
Even reliefs will based on preceding years. So some tax will be wondering, since every year the same, do I still, what do you want me to do? I would actually advise.
Quick confirm. They just want you to clarify.
I would say actually for this group of taxpayers that is under the no filing service scheme, basically they can just log into the portal, verify their income. If all the information are in order, actually they don't need to do anything. The bill will be sent to them after 18 April. Okay. But when they check and they realize, there's a missing relief, or otherwise maybe some of the conditions they no longer actually fulfill, they can actually proceed to withdraw, and that's where they will e-file their returns.
Okay. But do you all have like actually missing reliefs? Because from my experience with you guys, it's very efficient. You know what I mean? Like everything is more or less.
I think there are some things that you do have to know. So I think one example is for the parents, right? There's a kind of like taking care of a parent's relief, where you have to, I think that at least for the first year that you do it, you have to click through, click whether your parents stay with you or not, because that's different amounts, and then that entitles you to a relief. So maybe it's more of thinking about your past year and whether your circumstances have changed.
Okay.
And if that has changed your ability to qualify for any of these reliefs.
Yes, you're right.
Okay, very good.
I'm a very good tax filer.
Yes,
helping the nation, right? Nation building. 加油, everyone. Right? Okay. But how about let's break it down as different stages, right, of life, right? And I think amongst our listeners, a lot of them are working professionals, right? So maybe some people, 30 plus, still single, like myself, right? Like we're very hard, right? So on a strong career, you want everything, step by step, right? So a lot of people, even up until their 30s, they're still single, but they are very high earners now, right? Like relative to where they started 10 years ago, right? So like, what are they eligible to? What is the common struggles or incentives for these people?
Let me talk about tax reliefs first. For working individuals like yourself, automatically we'll give you an income relief. And the highest quantum is actually $8,000, and it's dependent on the age of the individual, and of course also the amount of earned income that you earn. So a max is at 8,000. In the event this individual actually, for those who have permanent disability, which actually severely impacts their work abilities, we also give them a higher relief. So on top of it will be for those under employment, they will also need to contribute their mandatory employee CPF contribution. So this will also be eligible for tax deduction under the CPF relief as well. For those who are actually self-employed, for instance, they may also choose to contribute to their own MediSave or CPF account. You also will be eligible.
What you will advocate for, should top up.
So this is also one deduction that you'll be actually qualified for as well.
Okay.
So this is mainly for the working individuals who is currently have not set up a family yet. So these are the more relevant ones.
Okay. If they're not working, do they get any relief? Let's say
no income, nothing
no income, fair. No income. Oh wow. Okay. Thanks. Yes. Okay, fair. Then what about families? Because I think that's where a lot more interesting things start to come in, right? All the different permutations and all that.
Yes, correct.
You see, singles always kena one, right? No, say always don't get good things, right? Okay.
No, there'll be other reliefs as well. Maybe we move on to the married couples one first. Later, I can elaborate all the other reliefs that, regardless of your marital status, you'll still be eligible. So talking about those who are married with kids, for instance, what we have is actually we have both child relief and rebates. For child relief, we actually have two types. One is what I call the qualifying child relief, which is up to $4,000 per child. So this qualifying child relief effectively can be claimed by either the father or the mother, or they can actually share, as long as in total the quantum is set at $4,000.
Oh. So do you have to transfer here and there between the parents, or is it automatically split, or how do you kind of decide the allocation?
Okay, when the child is first born, and if we have the information like Singapore registered babies, what we'll do is we'll automatically allow half share to each of the parent.
Okay.
But because it's a relief, means that every year you can do a bit of your tax planning with your loved ones to say, hey, maybe this year, like Anthony you mentioned, right? Maybe I earn a little bit more than my wife this year. So what you can do is, upon discussion and agreement, she can actually withdraw her qualifying child relief for this year, meaning she just zeroize it, and you can just make the full 4,000 claim.
Okay, so it's both parents need to go into the portal and make the same election, and then that will reflect in our system that has shifted.
Yes, correct. And it could be actually changed year on year because it's a personal tax relief.
Okay.
So the other relief, I'm sorry, Anthony, you won't get it, is really for the working mothers, which is for your lady. So what it means is that if the mother is working and she derive earned income, we will actually give her this additional working mother child relief. Currently, the quantum is actually based on the percentage of her earned income up to maximum 25%. But just to mention, in the event that the lady happen to have an earned income that is very high, the total capping for the relief for one child will be capped at $50,000.
Oh, okay. Wait, is this the one that shifted last year budget? I remember there was a lot of
there was some
noise.
I think Dawn was very unhappy, right?
I think she still is a bit
I
unhappy.
think she's still very unhappy, right? Like she was saying, yeah, like that, how then we don't give birth already. I was like, really, man? I don't think it's really.
Yeah, so when you were describing that is the new system, is it?
That is actually from year assessment 2025, which is next year's filing.
Yep.
So obviously, as mentioned, I think this is at the budget where it was announced. Yeah. The real purpose is because they are reviewing on the marriage and the parenthood measures that the government is giving the support. So taking that into consideration, we have actually shifted from a percentile of the earned income of the mother to actually a fixed amount, which is up to $12,000 per child.
So as long as you're a mother and you work, then you get this already.
Yes, correct.
Then that one cannot shift. This one cannot transfer to the spouse.
Cannot share. This is actually to encourage working women after they have actually given birth to continue to still stay in the workforce.
Okay.
Yes.
Encourage all the guys to go into the kitchen or something.
To continue working. No, I mean the guys still need to continue working, right? Yeah.
So actually, in addition to the two reliefs that I've mentioned, if the couple actually have a child, a Singaporean born or adopted in Singapore child, you are still eligible for what I call the parenthood tax rebate, which is up to $20,000.
Okay.
But just to mention, this is not a yearly rebate. It's a once-off at the year of birth.
Once off at the year of birth. Okay,
so it's an addition to the baby bonus. You take it off your tax bill.
Yeah. Okay, so this is interesting. Is there a difference between a relief and a rebate? This is the first question. And then, so let's say the child come out this year, right? And can this rebate be pushed to the next accounting year, or is it like it has to be this year? You got to account for this year.
Okay, that's a good question. The first question is relief itself is actually to reduce the what I call the chargeable income before we apply the tax rate. So effectively, it reduces the income that is subject to tax. Whereas rebate is something different. It means that after I computed the tax liability, you can use it to offset. Only in the event that your tax liability exceeds the rebate, then you pay cash or to actually pay off your tax liability. So in terms of, you may say, 20,000 for the child, this is for third and subsequent children. So you may say that my tax liability is not so high. So what if this year I couldn't fully utilize the 20,000? What will happen is automatically the balance will be brought forward to the following year to offset your tax liability for subsequent years until it's fully utilized.
Wow.
I did not face that problem. But
okay, yes. No, it's good to let people know, right? Like, okay, then have more babies, right? I think that's the idea.
Sorry, and maybe just to tag onto that point, reliefs are capped, right? So there's a certain cap on deductions that you can make. Whereas I guess that rebate is one off at the final bill. If you can't spend it finish, you just carry forward to next year's until you finish spending it.
Yes, correct.
Okay, so are these the only ones for married couples, or
these are the only ones for kids?
For kids, okay.
Yes, but tagging to it, the other two relief is also meant for married women only.
Okay, lor.
It's also my wife and I, we share finances, right?
Okay,
so we can talk about sharing finances, but yes.
Okay, fair, yes.
So probably I also want to share on these two relief. One is what I call the grandparent caregiver relief. These are situations where the mother needs to work. So what they do is they engage their parents-in-law or their own parents or even grandparents or grandparents-in-law to take care of the young kids. Okay. So what we do is we do recognize this, and the working mother can actually claim up to $3,000 grandparent caregiver relief.
Is this only for working moms or for either parent?
It's only for working mom.
Okay, this is more for policy, but why?
It's actually on the same basis that it's on the same basis
we
that
also work very hard,
Definitely. But I would say the whole objective is really to encourage the working mothers the mothers to continue to work. Because most of the time, I would say generally mothers will still want to take care of the kids and want to work. They may have they may prefer someone to take care of it, and in this case we're talking about getting the grandparents to take care. So this actually is to really help the working mothers so that they can be working more at ease, I guess, on this part.
Then I guess why the difference between grandparents and childcare center, right?
Okay.
Because it's still encouraging people to go into the workforce. It's just a different kind of mode of caregiving.
All right. But taking on this relief, just to also mention one of the condition is that because some of the grandparents may be working as well. So starting from this year of assessment 2024, in the past, once they are working, actually they can't meet the qualifying conditions. But starting from this year, we actually set the income threshold, meaning as long as the grandparent is this case, the annual income is below $4,000, then they will be eligible for the claims.
Right. Annual income below 4,000.
Yeah, not exceeding 4,000.
Grandparents' annual income
Yes.
可以做什么？不是啊
Yeah, so they must
So
essentially be
as good as just very part-time type of situation. So the idea is so that you account for the situation where they actually are taking care of the grandkids and then just do some side project for fun like that.
Yes, because some of the grandparents may still want to be in connection with the society.
I know.
So probably they may be doing some
Horticulture work.
Yes.
Quite a lot of them are in it. It's quite fun. Yeah.
So another relief is really only for working mothers is the foreign domestic workers levy relief.
Oh, yes.
So this is a situation that if the family do actually engage a foreign domestic worker to help in the household, the women can actually claim for the relief based on twice the amount of levy that was paid.
Okay. And this is for women only, but not only mothers.
Yes, that means as long as you are a married woman.
As long as a married woman.
So if a married woman employs a family helper, a domestic helper,
kid no kid doesn't matter.
Kid no kid does not matter, you get the relief.
Yes, correct.
Okay, why leh?
Well, it's the same thing because
idea you want.
Yes, you want someone to take care of the family so that the lady will be at ease and go out to continue to
she
work.
don't need to do housework. She can go and work outside.
Okay,
come back to a clean home.
But I also want to mention that in line with the new reviews of the government support for the marriage and parenthood, this relief will also be lapsed from year of assessment 2025. Yeah.
So the domestic
Foreign
domestic helper relief will no more.
Yes, correct.
Okay, then what's to replace it?
Nothing.
I would say that at the government level, as mentioned in the budget by the minister previously, there are other government initiatives. So actually, tax relief will not be the only, I would say,
the tool
tools to
thing,
ease them.
Yeah,
Yes, correct.
Okay. 没有了.
I mean, that makes sense.
Don't need to quabble over it already. That's it.
It's not about gender equality, but everybody
it's no more. All don't have, right. You know, but I think it's also a big part of trying to encourage parents to start to kind of like go home more and take care, be more participatory.
I don't know about you. I feel like there's a broader shift in incentives. It's not only about you work, you earn income, and then I reduce it. That's a relief, right? And that's very targeted, very narrow section. We redistribute, I think, in a different way now, or we are shifting towards redistributing in a different way.
In what way? Can you share your thoughts?
So I mean, to me, it's a lot of the we like to call it the voucher rebate or sorry, not the voucher rebate, the
tax and
the
spend
election
method.
rebate.
Election rebate.
But
很敢讲 this one. Right?
Yeah, but I mean, we redistribute differently now. It's not only you work and then you get relief, therefore we encourage you to work. It's we know you are in trouble, therefore we help you with your daily life, right? And that is independent of your work, because you could be disadvantaged and you can't work, right? Then all these reliefs don't apply to you. Like you might need a helper, you might need, because you have a grandparent at home that needs help, so you hire a helper, but you want to jaga because it's your parent, then you can't work. This relief doesn't help you.
Exactly. I feel like more than half the list don't apply to me.
Yeah, it's not meant to.
Yeah, it's not meant to, right? So it's quite safe now sometimes, but yeah. Okay.
So but maybe before we move on from all the motherhood and female centric rebates, doesn't this kind of mean that actually every year, as long as you have, not as long as you have a kid that year, but as long as you have kids, you kind of already will max out your 80K without doing too much more?
Yes, there's actually, now until you mentioned about the 80K, we do have a total, or rather a cap on the total relief for each year of assessment at $80,000. So yes, it's more higher chance for a female with more children because of the working mother's child relief at this point. Yes.
Yeah, but the other time Josh came on the show, Josh Tan.
Yeah, Josh.
Yeah, he came on the show. He talked about how he has 90,000 relief, right? Essentially, 10,000 of it comes from his donation to charity.
Wait, so the donation limit is above the 80K?
Does it
no,
stack this way?
No, it doesn't. The 80,000 limit is only on tax reliefs.
Okay.
So for donation, it's actually a separate deductions, which is based on how much you have actually donated to approved institute of public character. You'll be allowed 2.5 times the
Okay, so
deductions.
it's a technicality type of situation,
Yes, correct.
right? So it's just about the words that you use. So essentially,
Yes.
maximum tax relief is 80,000.
Yes,
right?
correct.
Any extra things that you do on top, then that is a separate structure.
Yes, I would say those are other deductions in this case.
Okay. Fair. Yeah, that's interesting. Yeah. What
we
else?
should cover the other deductions, but why don't we finish tax
we
relief
should.
first?
Later we talk about the other deductions. Okay. Yeah.
Sure.
But what about any other tax reliefs that?
Okay, the other reliefs probably will be more applicable for your case.
Yeah, finally. Okay. Now I can sit out already. Finally can listen.
Yeah, now I can sit back.
Yeah.
Yes, one of it is really cost-free relief. In the event individual actually did attend studies on a course, seminars, or even conference that actually may lead to higher qualifications. It could be in academic way or vocational or professional way. They may also qualify for this deduction of up to $5,000. So in this case, I would say that we actually shift from tax relief to more targeted direct subsidies to help people in terms of lifelong upskilling.
Yeah.
So with this in mind, actually, this relief actually will lapse from your assessment 2026.
Oh, okay.
So I think this is
future comes in.
Yeah,
Yes.
that's
Oh,
why
a plan.
they give you the $4,000 now, right? If you're 40 years old, right? And then you can have a second dip into a poly, blah blah blah, right? Yeah, maybe one day we can do the uni also, lah, right? So yeah,
correct.
okay.
But for this year, which is your assessment 2024,
You still can
if
get
last year you attended a course or that, you fulfill the conditions, you can still have the deductions.
Okay.
The other one probably you'll be more interested is really what I call the supplementary retirement scheme.
SRS.
So
SRS,
SRS in short. So individuals can actually contribute to this account, or even those who are under employment, their employer may contribute on their behalf as well. Whatever contribution amount will be actually given as a relief. But just to mention, there's actually a cap. If you're actually a Singapore citizen or SPR, the cap is at 15,300. For foreigners, is 35,700.
Okay, so this is a cap in a cap, right? So 80,000 is the big cap.
Yes.
Then this one for this category is only 15,300. That's the cap.
Yes, correct.
Okay, fair.
Yeah, so for SRS, right? So, and this was part that maybe now it's a bit more worrying after the last budget. But essentially, what I understand is you have that 15K limit a year. You slowly accumulate over many years in your personal finance planning. Like, okay, I need to invest this, I need to put in T-bills, whatever, right? You still need to invest that money. It's just in a separate account that you can't touch until retirement age, in that sense.
And then you stage the exit, don't forget.
Yeah, so I think that was the question I wanted to come to, right? Like, when you withdraw, there's a limit as to what you can withdraw tax-free. Is that correct? From the SRS. I mean, I'm nowhere near there, but I guess.
No, okay.
Some people
I take a jab at it. Maybe you can correct me after that. Okay. So from what I understand, as you withdraw it, right, you have a 10-year time frame. Okay. And in this 10-year time frame, every time you withdraw, it will be considered your taxable income. Right.
Okay.
So if let's say you withdraw 100,000, it adds to your taxable income, right?
Okay.
So the whole idea is you want to stage it. So that you kind of keep within a certain bracket.
Okay.
Yeah. 是不是?
Partially.
Okay.
You're almost there. You're almost there.
Complete answer. Yes.
Yes, the concept is correct in the sense that when you reach the statutory retirement age, you can start to withdraw the. Actually, I would say you can withdraw anytime, to be very frank.
Yeah.
But it's only you want to withdraw it penalty free because I would say before retirement, we call premature withdrawals will be subject to penalty, which you wouldn't want. So I would say it's not that you can't, you could also. So in the event that you meet the retirement age already, you can have the qualifying withdrawals. Like what Richard has mentioned, you can actually stagger it over a 10 years period. But it's not the full sum will be subject to tax. It will be half.
50%. Yes. 50%.
Half of it will be.
But if you are not at the statutory retirement age, it's 100% taxable,
yes,
right?
Correct.
That's the penalty.
I think it's 100% plus a bit more.
100% plus penalty.
Yeah, plus penalty.
That's an additional.
Yeah.
Okay, fair.
Okay. Then I guess the broader concern is that, okay, look, over the last few months, we have heard so much about CPF changes, right? What about SRS withdrawal changes?
Yeah.
Is that already fixed in stone? Because I know at least for the retirement age, it's fixed, right? Once you open that account, you contribute $1. That's the statutory retirement age for you. If government, I think last month they changed it
the
up,
retirement
it doesn't
age.
affect
this
your
cohort.
SRS
Yes,
account.
correct.
But what about the and of course, your in a sense, your tax-free limit that is that 50% will always go up. So that one subject to change, that's fine. But what about, that ability to withdraw tax-free at a 50% thing? Is that also subject to change, or is that kind of locked in until you get there?
It's locked in already.
It's locked in already.
Okay. Of course, whether because now we are all pretty young, right? So
Yeah.
probably it's like, let's say 20 years later, 30 years later, when you reach a statutory retirement age, really depending on the tax rate then already.
So
there's something
tax
that
rate
is
then tax brackets then that's all fair, but at least that 50% discount in that sense is locked in, right?
Yes,
it won't
correct.
become like 30%, 25%.
No, because that's how the scheme works.
Okay.
Is it tied to it? Like at this point in time, or I mean, the scheme is like that.
Yeah.
There's probably a constitution around this scheme.
Yes.
Is there a way? Is there a chance? I mean, is there a chance that it will change? Is it malleable?
Or is it already a contractual framework?
Is it a contractual framework that we
you
sign
need
up for
everybody
this?
else to change?
Yeah.
Everybody to agree before you change.
Hey, welcome to the Financial Coconut Podcast Network. I'm your host, Reggie, aka your Chief Financial Coconut. And if you're loving what we're creating here, like, share, subscribe, share with your loved ones, comment in the comment section below. And yeah, we'll see you for great content on Chills with TFC.
I guess this, like what you just mentioned, if there's any changes to this scheme itself, I think it will have to be a legis change, and all this will have to take into considerations. Because at the point where, I mean, to be very honest, at the point where the member of the public actually enroll into this scheme, this is actually the terms and conditions that were presented to them, and they have considered it.
Yes.
So I would say, in practice, I don't think any time we will just say, I'll just change the scheme anytime.
Yeah.
But I wouldn't say it's totally not possible.
Yeah.
And if it's to be done, it will be a legislation change, because currently SRS is governed by a legislation as well.
Okay.
Yeah.
It's like CPF.
I mean, that is the part we don't want to say.
Yeah. I mean, because to us, we are. I mean, amongst our listeners and our community, we all try to plan ahead, right? Which is good, right? Right.
That's what government
that's what we want us to do,
for
right?
our own retirement.
We plan ahead, right? And then 5 years, 10 years, this system change again, right? There's an update, there's change. It kind of affects us a little bit. So I can understand why people base song, right? And then they just want to know, like, is there consistency? You know where we're getting at this, right? So it's a situation where we understand systems develop, you need to update the system, right? Like from an intellectual standpoint, we all run big teams, we get it, right? But sometimes people just want to know it's consistent, right? So you know what we're saying, But at least we know that it's governed by legislation. So if anybody wants to change it, they have to go to the House and legislate from there, right?
Yes, correct.
And then we know who to blame. It's not IRAS.
Yeah. IRAS is the execution team, right?
They're the administration.
Yes, correct.
Yes, so okay. Shall we continue? What else? What other interesting tax reliefs do we have?
I would say probably I also want to mention this more commonly claimed relief. There's two more, which is parent relief as well as spouse relief. Okay, for parent relief, actually it's applicable regardless of your marital status, but it's dependent on whether you're actually supporting your parents. It could be your grandparents, great-grandparents, and including your in-laws. But there's actually some conditions to be fulfilled. On this podcast, I will not mention all the conditions of the relief because it's going to be a very long list.
You can
but
check out the IRAS
yes,
website.
check out on our website.
Yeah.
But in Jesus, I would say the parents will need to be residing in Singapore and at least 55 years of age.
Okay.
And of course, we do also have the income threshold set on the dependent, which is currently at $4,000. So individuals, if they are staying with their parent, they can claim up to $9,000 relief.
Okay.
But this parent relief is something that I also want to share is it can be shared among different siblings. So let's say, for example, me and my brother, we want to share the parent relief claim. It could be done. It's just that the agreed, the total amount of relief both of us claim on the same parent is actually capped at the max.
Okay. So similar to the spouse situation that y'all sit down and kind of manage work it out, this tax relief, who want to use this.
Yeah.
From a sibling standpoint, you also have to do that, right? Okay.
Yes, correct. But the other relief is actually spouse relief. If let's say you have a spouse that you are supporting, and again the spouse does not have income more than $4,000 in the year, you can actually claim up to $2,000. So taking on these two relief, let me quote you an example, illustrations. So let's say, for example, my dad want to claim spouse relief on my mom. My mom is above 55. She does not have any income. Then for me and my brother, I also want to claim parent relief. Actually, we can't do that. In other words, how it means is I have to then discuss with my dad. If he wants to claim for spouse relief, both brother and myself can't claim for parent relief. And vice versa, if we are claiming for parent relief, My dad
Your
can't
dad
claim for
cannot claim
spouse
for
relief,
spouse.
but my brother and I can share the parent relief. So this is actually something that I would say as a family we got to discuss lah.
Not easy,
Yeah.
this discussion.
I mean, 9,000 more than 2,000, right? Simple math.
9,000 more than 2,000. I tell your dad, your mom to like, hey, relax.
Yeah,
lah,
relax.
right?
I give you $100, right? You don't claim that.
Ang pao for Chinese New Year, I give you more, okay? Relax, right? I need this.
So this is the relief, and these two reliefs usually are more correlated. But of course, it applies to all the other reliefs as well. In other words, if the same dependent is claimed by someone else under another relief, we will not be allowing the same dependent to be the dependent for relief for two different parties. I mean, I was just looking at Anthony's face, so you need a clarification on that.
So I kind of, so maybe I'm working it out in my head, right? So it just means that the relief, no matter whether you call it parent relief or spouse relief, is tied to that individual that you are supporting.
Yes, correct.
And then whether or not it's somebody's parent or somebody's spouse or somebody's grandparent, that's all tied to the individual, and all the reliefs that across the various people around that individual are related, and then only one of them can be claimed.
Yes,
because
correct.
the idea is that you are supporting that one person.
Yes, correct.
Okay. So in other words, if my parents claim parent relief, I cannot claim parent relief from my grandmother.
Yes, correct.
Something like that, right?
Yes.
Okay.
But you can share. Because parent relief you can share. I would say tagging on this is really talking about the dependent's income threshold. Because that's why I mentioned quite a bit about the dependent must not have annual income more than 4,000. So actually arising from this year's budget, we actually have, it was actually reviewed as well. So the threshold actually increased to $8,000 already from next year onwards.
Okay.
Yes.
Makes more sense.
From year of assessment 26. Yes, correct.
Okay. So from next year onwards.
Year of assessment, yes, correct.
You think about it, right? By the time our listeners listen to this part, right, they ask themselves, all these relief, I cannot claim it for this round, right? So what is the kind of like process for all these things? I must essentially settle everything before the end of the calendar year, right?
Yes, correct. So now, if you're talking about this filing season, we're talking about last year.
Yes.
So in a sense, it's historical. So you base on whatever had happened, and then you make the claims accordingly.
It's okay, you can plan for this year.
Yes,
you can plan for this year so that next year's filing you are more prepared. Besides reliefs, actually we do have other deductions. So maybe I take the opportunity to share as well, because some of us, maybe some of the reliefs, we don't fulfill the qualifying conditions. So I would say for deductions, right, we do have what we call the employment expenses claims. So for those who are under employment and they have incurred for probably some expenses like work from home expenses, or even in the course of carrying out their employment duties, they actually incur expenses and the company didn't reimburse them, they can actually claim it as employment expenses and deduct against their employment income.
Really?
And this is not within the 80,000 relief cap, just to mention.
Okay. So for context, let's say during the work from home period, right, I bought an adjustable table and a Go-Tune like chair, right? So those things is part of my work from home setup.
Can I submit a receipt?
Yeah, so I will have to keep the receipt and then I can submit as a deductible. If let's say my company never reimburse me.
I would say in specific your example, right, because you're buying an item. So in a sense, you have to actually make sure that the expenses is really wholly and exclusively that you need it for your work. So those items that you mentioned is very general.
Okay, I say and play game. Yeah.
So I would say when you talk about work from home expenses, actually we are more like looking at probably now because you work from home, maybe your utilities bills go up versus when you're full time in the office.
Oh.
So the difference because those is your normal residential expenses you can't. But the increase in it maybe in terms of the electricity bill because you're on the aircon or whatever, or maybe I call it the utilities bill. The difference is that you can actually make a claim if let's say no reimbursement is made by your company.
Okay. What about let's say I buy sorry, very nitty gritty. But let's say I upgrade my internet, right? Because when I didn't need to work from home, my internet 500 Mbps is enough, but now I need to work from home, my internet is not fast enough.
So if you're talking about now you pay a higher subscription, all that, yes, that will be the difference lah. That means what is the increase in the expenses due to you now need to work from home.
Okay, how about you give us some tangible examples? Like what are certain things that
you have seen
confirm
and
can claim one, confirm can
one.
deductible one, this thing.
Okay, for work from home would be the two examples that I mentioned. Mainly it's really the running the utilities. Then if you're not talking about work from home, it will be really things like maybe as part of your job, you actually needs to go to your client's workplace. So you take public transport or that. All these are also eligible employment expenses that you can claim.
Grab can claim not?
Yes, if it's for official.
Okay.
Yes, but I think a lot
So
of
my daily Grab commute to office cannot claim.
cannot, because this is your personal, you need to go to work. But it's more like, for example, I come from Revenue House to here for work purposes,
Yes,
right?
specific.
So we could actually, if we, whatever transport expenses that we incurred, in this case, can be claimed as expenses if IRAS didn't pay me back.
Okay.
Because it's purely for work purposes.
Okay. Fair. And you have an extensive list of this.
Yes, you
these
can
things.
actually look at it on the website, some of the more common examples or claims that individuals has made.
Yeah.
But this is more for employees, those under employment. So for those who are self-employed, in the course of running your business, you may also have business running costs, like it could be maybe staff costs or maybe the rental of your premises. All this will also be eligible for deductions. But again, there are actually some conditions to prove that it's actually related to your business. So once you meet the conditions, you can also claim against your trade income.
Okay, fair. So maybe you can expound a little bit more for the self-employed, right? Because I think the self-employed got two groups, right? One are the type of people that really just operate as a self-employed entity, and then there are the others that they set up a business entity and they employ themselves in that business entity, right? So how are they kind of like seen differently?
Okay, one of it is what I call the self-employed person, which is mainly probably the sole proprietor.
Yeah.
Then the other one is more like they set up a company, probably they sit on the directorship, so they are the director of the company. Let's put it this way. So the difference is if you're actually the sole proprietor, so this will be considered as a self-employed income. So you'll be following the trade business conditions on all the deductions and the taxability, and you'll be still taxed in your personal name. Versus the other situation, let's say I sit on the board of director or I'm the director of the company. Company will then need to keep their accounts and they will have to declare for corporate tax. And whatever income in this case that I receive from the company, because now you mentioned, right, company employed me, right?
Yeah.
So you'll be paid a fee or you'll be paid a salary, then this will be considered as my employment. So there will be two different tax, I would say, entity in this case.
Yeah, which is the situation that I'm in.
Yeah.
Right, yeah. This one another time, okay? Come here again. We talk about corporate tax and like all the SME bosses, all these other things, right? Okay, fair, nice.
So then is this employment related deduction capped as well? Or is it subject to a separate cap?
I think
no.
Our listeners very excited. Say they listen.
They start looking at utilities bills already.
Wow, my utilities bill went up $200 every month. Let me first see can claim. No.
I would say that as long as it's really a case that is arising from the work that you have incurred, of course you have to keep all the receipts, everything out. If let's say we were to ask for verifications, then you can actually claim. Actually, there will not be any limit in a sense or cap. But of course, I mean, one question that we may raise is, why are you incurring more expenses than your income? When you're working for someone else, I mean, then this will be something that we may need to
have kopi. I tell you, don't anyhow.
This is a red flag. Don't anyhow
Don't
claim.
anyhow. Yes.
Claim the legitimate
but
expenses.
they could be really legitimate reasons for it. Then it's more on clarification on this point.
Okay.
But effectively, I wouldn't say there is actually a cap on that.
Okay.
Yeah. Maybe just one thing on the front. I just want to get clarity on the terms, right? Because relief is one thing. We established that rebate is a different thing.
Yes.
And then deductible has a similar structure as relief.
Okay, the deductibles, like all the expenses, all that is directly to be offset against that source of income. Like for example, work from home expenses
So it's
will
not a
bring down my
totality thing.
it will bring down my employment income.
Okay.
And then rental, then I will be only looking at the net rental income when we aggregate the income per se.
Okay,
Whereas
fair.
relief is a different segment, that's where the caps comes in. And donation is also a different segment where it's based on what you have donated.
Okay.
Yeah.
Okay. Fair. Yeah.
And,
Quite clear.
And donation is 2.5 times?
Yes, 2.5 times.
Okay.
So every dollar you got 250 deductions.
Okay. Fair.
Okay, makes sense.
Yeah, that's why all the charity fight for the.
Yes,
want to
all
get
the
a
charity will tell
license.
you very big upfront.
We
tax
have
deductible.
this thing can deduct.
Yes. But only for certain because we go to one of the temples to donate, right? And it's only for certain types of donations. So if you donate to specific classes, then it's tax deductible. If you donate to other classes, then it's not tax deductible.
Okay.
Yeah, and then they are very clear, and then they give you a receipt. for your records, so that you can show IRAS next time that it's tax deductible. You make sure that it's there.
Okay.
Basically, it's donations to approve of public character. So we actually go to the charity portal to look at the list of approved overseas organizations that you want to make donations.
So I can go and check myself. I don't need to
Yes,
listen
correct.
to the person.
But of course, upfront, you can also engage them if this is one of your considerations. Then to check in with them whether they're actually in the eligible categories. Yes.
Nice. Okay, cool. Yeah. Any other things you want to add that we've missed out that is very common? Where relief, deductible, rebate, all this stuff?
Actually, just now I did mention, but I thought just to maybe
reiterate
the point.
Yes,
correct. It's really talking about when relief claims, although some of the relief you may pre-filled based on preceding years filing, individuals should still validate that they still meet the qualifying conditions. And if they don't, please proceed to actually withdraw the deductions.
Or if you go to a higher tier, then you can increase your deduction.
If you meet, because sometimes your circumstances change. Like you have a newborn, all that, then these are new reliefs, or maybe now your parents no longer working, you are eligible for the reliefs. So you need to evaluate on a year-by-year basis to make sure that you still meet the conditions and you are claiming the relevant amount that's within the cap.
Okay.
And of course, the other common, I would say, errors is really talking about duplicate claims, in the sense that, by right, the family members should come together to make sure that there's no duplicate. The total quantum claim, it doesn't exceed the max. But sometimes there's some individuals that didn't have these communications. So it may result in, the claims actually exceed 100% of the relief amount. So these are situations that we may want the taxpayer to actually take note and probably to discuss with their other claimants.
Yeah, I think that's what happened with my parenthood tax rebate the first time round.
Yeah.
Because newborn, right? Then my kid was born at the end of the year. Then tax filing system came out 5 months. We were all in COVID. Then I think too tired. I clicked or my wife didn't click or something like that. Then we have the 150. Then IRAS actually emailed us like, guys,
I'm sure they never say guys.
Yes. It seems wrong. Then I'm like, okay. Then we went to. Then I think we forgot because again, newborn baby, tired, COVID.
Understandable, right?
Then at the end of the day, I was like, forget it. You'll still get 50-50.
Okay. So is there something like that? So let's say in your system you flag out something like that and then you notify the people, right? And then they don't kind of rectify. Is there like a baseline that you will practice?
Go back to a default.
Yeah, is there a default? Let's say 3 siblings, all claim parent, something
yes, correct. That means what we'll do is we'll upfront still reach out to the claimants, because it could be like in this case, you're too engaged with your newborn, right? So we will alert you and say,
it's so positive, right?
Yeah. I just did. It's like too many words. I don't
too much. Tired.
So if let's say we'll still inform them so that they can actually come with a agreed apportionment. But in the event they didn't come back, or they come back still doesn't make up to 100%, then we will actually share it equally among the eligible claimants in this case.
So that is your baseline.
Yes, correct. But we'll still go back to the individuals to request them to make their own decision first.
Okay.
Yeah. So IRAS does give you chance.
Yeah, got chance. Okay,
yes.
if not, at least there's a baseline. Okay,
yes.
Just to be clear.
So I also want to share that actually making wrong tax relief claim is actually an offense.
Okay.
So I would strongly encourage, if let's say after
strongly encourage, yes.
It's an offense, but strongly encourage.
So I would strongly encourage individuals to actually go to our website to really go through the qualifying conditions of the various reliefs. And in the event that they found that, I actually make an error, then to come forward to us to actually rectify the error to reduce the penalties.
Okay. So what happens if, let's say, maybe just since we're already at the topic, right? So let's say there's an error, I come to you, then I 自首, right? Essentially, I come in, then there will still be a penalty.
It depends on the situations, but I think upfront, what we will do is we need to rectify that. So we will probably need to give you a revised bill first. Then, of course, depending on the circumstances and situations, that's where we will then consider what are the penalties to be imposed, or whether can the penalties be waived.
So it's a more case by case situation.
Yes, correct. But I think upfront is really to rectify the tax bill error first.
Okay,
Yes.
fair. Yeah. Maybe from an operational standpoint, right? Now our listeners, they listen to this, then they're very excited. They want to go and
I'm going to check my electricity bill now.
I'm going to check my utilities. What's going on here, right? So they do everything, right? And they go into the portal, but now it's already what it is, right? So by the time this goes out, we're 2 weeks from the end date already, right? So whatever that needs to be done, you should have already done late last year, right? So what do you need us to check then when we go in now? Like because a lot of things quite automated, right? So everything is quite easy already on the IRAS portal.
Because most of the income information should be pre-filled or auto-included already,
Yeah.
but they may also have other sources of income or company not participating in the scheme. So they will still need to declare this, I would say, not auto-included income, the additional income. Relief-wise, like what I mentioned, they'll go through whatever relief that is pre-filled. So they just need to ascertain, okay, I still meet the conditions, then that's fine. Then on top of it, ask ourselves whether there are other reliefs that last year I omitted, they can still proceed to indicate for this year.
And I think IRAS is very good in that. I think when you go through the form, right, they actually show which reliefs that you have not got. So you can actually click through and think about whether you qualify for this. Right? It's not that they are hiding it from you. It's actually shown up to you up front, but you need to make a declaration. But since I have you here, I do have a question about your top line, so the income right at the top, right? So there's the employment kind of line, and then there's a other earned income or something just below that. Actually, what is that?
That is more for self-employed.
Okay.
The trade or even, for example, the private hire car drivers, they are also on their own. So all this will not be considered as employment.
Okay.
So it will be considered as other income. Basically, it's considered as a vocation, a trade income.
Then what about like my employee benefits, like my health insurance and all that? Does that also all fall? Which line item does that fall under?
All will be under employment.
All will be under employment.
Yes, but employment largely they have 4 categories.
Yep.
One is the salary, the more common one. Then we have our bonus. Then the others is really the others. That means all the other benefits that the company may actually give these individuals. But all this will add up together, will be a total employment income.
Okay. So I think that was always my problem. I see that random number.
Yeah.
I know my salary, that one very clear. I look at it every month. I'm very happy when my month end comes.
Very tired, every day very tired. I work until very late, but when the month end comes, okay. 可以.
I know why I'm working.
So, right? Let's continue.
Let's continue. But then you look at all the other subcategories, and I was like, what is this? Is it like my company's paying for my insurance, but I don't know how much that costs, right? Like genuinely, because the company pays for it, I don't have a choice in it. It's just enroll in it. But I guess that's taxable. And that was the argument I had with my company HR actually, because they were giving us lousy benefits, but it was very expensive.
But you still got a tax, yeah.
And then I was like, then they're like, oh, but you can downsize, and then it's essentially zero coverage, but you pay like $1,000 for it. Like, dude, I pay tax on this, You cannot just say I pay for zero benefits. It doesn't work that way. So there's that. Okay, so I think that is a part that I always don't know how to check. But I guess you have to go and ask your employer what they filled in for you and kind of what the cost of the benefits are in that sense.
Correct.
Okay, cool.
Yeah.
It's amazing.
I scrutinize my tax every year.
I love it. Yeah. A-star student, right?
Yes, A student.
Yes, very good. Yeah, and if our listeners, after listening in, some of them have more specific things that they want to clarify with you, with your team, like where do they reach you guys and all that?
I would suggest that you all go to our our website first, because actually because today we talk a lot on reliefs and deductions, right? Actually, we do have a relief checker on our website where you just need to answer a few simple questions. Things like your marital status, you have kids, you're working, that kind. Then we'll let you know out of the 18 reliefs, right, which are those that you are more likely to be eligible. So from there, you click on each of the item, you'll be able to see the conditions as well as the amount that you'll be eligible for. Fair. So I would say on our website it's very comprehensive. So I would suggest I would suggest you to go to our website first, which is at www.iras.gov.sg. Yes, but if let's say there are really very specific inquiries that they want us to assist, they can also use our chatbot, or they can also contact us through we have the helpline, we have the live chat, and as well as email us through my tax portal.
There's a sales service system set up at the back, right?
Of course.
Probably Zendesk or something.
Well, this is what part of our nation building goes to, right?
Yeah. Fair. But efficiency. Okay. Wait, I got one last question, right? That came in my head. Right? If let's say for some reason someone did not claim a relief, right, and then 2 years down, then they realize that, hey, actually I can claim this relief, right? Can I back claim?
Currently, we do allow individuals to still come forward to let us know if there are actually certain omission, be it relief or even income, but up to back of 4 years. That means excluding this year will be 4 plus 1 or 5 years.
Yeah.
Yes.
So assume you have a kid, then you're very stressed for the first few years.
Oh,
right?
that one auto one. Auto one.
Okay,
You don't need to
yes,
forget.
yes.
Okay, okay.
It's the allocation that's that you might want to tweak yourself. Yeah.
Awesome. Thank you. Any last things you want to say?
Actually, yes, I do have one last question.
Okay, wow. This is a two-parter now. So,
So nowadays I get like WhatsApps and all that going, hey, we get refunds, log into this portal or
June
what.
1, right?
That's not true, right?
That's right.
Yeah, talking about this, I also want to encourage our taxpayers to stay vigilant, especially during this filing season. I would say there are actually probably around 3 kinds of scams that is ongoing. The deals you can actually see on our website as well. Usually we'll caution the public, like what are the upcoming scams that we have been notified. It will be published on our website as well. So one of the common, by what Anthony mentioned, is the tax refund. Sometimes how the scam works is they will tell you, hey, you're eligible for a tax refund. Then they ask you for details. And that's where the issue comes after you enter the details. So I just want to share, for any tax refunds, if you are eligible, we'll actually make it through the GIRO account that you register with IRAS. Or will be through the PayNow account that is tagged to your NRIC or your register number.
And now it's filing season, it's not refund season, right? Refund is like later in the year after everything
generally,
is
yes, but there may be situations where taxpayer come forward to claims for relief that they had omitted earlier. So it may really be a situation that they are eligible for tax refund. But what we want to say is we will not go to the individuals and say, hey, give me your details, I process the refund. We won't. In a sense, whatever you have set up with us, we already have the info. You're on GIRO, we'll refund to your GIRO.
Yeah, and they will never email, hey guys.
Yeah. No, I think they email only through the IRAS tax portal email.
Okay.
So you have to log into IRAS tax portal to check the email, which I found a bit frustrating, but I guess it's safety
it's a
first.
safety thing.
Yes, because there's actually quite a lot of phishing emails nowadays as well. So generally for tax purposes, any updates or even transactions, right, I would say that taxpayers should go into my tax portal. Yes, you have to go through your SingPass, but that is really a security features that it helps to protect everybody as well.
Some of this friction is needed.
Yeah.
Like, cannot everything too efficient, too
Yes.
easy to have.
Otherwise, you'll be like crypto.
Yeah. Then you have all sorts of weird things. I mean, even all the banks now, the money lock. There was a period of time it was very annoyed. Right? Now it's like everybody's like, where's your money lock feature, right? So it's great. It's great.
Yeah.
Okay, cool. Any last things you want to say? No, I think we are good.
Yes, last call out. Please file your returns by 18 April. If you receive a filing notifications, or if you need to check your information to log into the portal to do a check. Yes.
Tax is nation building.
Yes, and thank you for your nation building. Thank you, Anthony.
Thank you for your time. Awesome.